Hello and welcome everyone again to another session where we help you look at the finances of businesses and help to understand them. Today we have a really interesting company that one of our viewers submitted to us, Powerhouse Energy Group. Now, Ted, I haven't come across this company before. Have you heard of them?
Nope, never heard of them before until our friend, here it is, it was Kahim said, love a review on Powerhouse Energy, please. So what could we do but do him a favor and review it?
Absolutely. And by the way, you too can do the same. So if you're thinking about investing in a company, or if you think about doing business with a particular company, you really want to kind of get our view on their finances and kind of make smarter decisions or smarter presentations, leave a message in the comment section below. And of course, like, share, subscribe to a video so you get our latest videos. But yeah, let's look into this company because I'm now going to have a closer look at this business now that we've researched about them. So they do some really interesting clean technology here. Essentially, they have a technology that's quite new that helps convert unrecyclable plastic. So plastic that would normally have gone to a landfill or gone into some sort of incineration, which would traditionally add to the greenhouse gas effect. They figured out a technology that will convert this unrecyclable plastic into synthetic gas. So think of synthetic gas as the synthetic version of natural gas, which would have applications in electric car or electric engine recharging. It would have application in industrial feedstock. So very, very interesting business. And stick around because we found something pretty interesting about the finances of this company. So Ted, take it over with your expertise. What have you found?
Okay, well, thank you very much, Moeed. That's a great introduction. So let's have a look at Powerhouse. Here are their annual report and accounts available on their website to download, publicly available information. Whenever I get a set of report and accounts, the first thing I do is whiz all the way down through to the profit and loss account. So Moeed, you gave a pretty good description of what the company does, and I have to admit I've never heard of them, and it sounds pretty exciting. And here is their profit and loss account. Now, the first thing we notice about this company is the revenue is nil. There's zero sales. This is a listed company and they're not actually generating any revenue at all. So they've got administrative expenses. This is the cost of running the business. There really isn't any other costs at all. There's a little bit of finance costs, but not a lot, which means they don't have any debt. Hey, who's going to lend to a business that makes a loss? And they get an income tax credit, so a kind of a credit back from their taxes. So they're basically booking a £1.5 million loss compared with a £2.4 million loss in the previous year. So this sort of raises lots and lots of questions. So first of all, how can they be, what's going on with this revenue? So if we go down to, I dug into the accounts, to the notes to the accounts, and we find a little bit about revenue recognition. So here's a note on the revenue recognition, and it talks about how the company carries out work on a customer contract, but because they haven't fulfilled under that terms of that customer contract, they can't actually fulfill the revenue that's required. So it's kind of, we're working on something, the sales are coming, they're in the pipeline, they just haven't come through yet. And we kind of think, okay, that's absolutely fine. New technologies, as you mentioned, they're investing. So we kind of see that they're investing, it's jam tomorrow. Okay, so that's the first thing we need to be aware of. Let's go back to their balance sheet. So the key then is, if you're making a loss, you really need quite a strong balance sheet sitting behind you, which is your kind of financial strength. So in the balance sheet, we see, first of all, there's really no assets at all in this company. So they've got a few intangible assets, 16,000 quid's worth, but there's no physical fixed assets. What they do have is this contract, and the key number sitting here is really the this number here, the cash. So how much cash do they have at the bank? At the beginning of the year, they had about £841,000, and at the end of the year, they've only got £100,000. Now, if you're losing 1.5 million pounds a year, it doesn't take a rocket scientist to see what's actually coming up next. So if that is the issue, oh, and by the way, if we just nip down to the bottom half of the balance sheet, in terms of the liabilities, it's all short-term liabilities. It's all current liabilities. Current liabilities are greater than the current assets, so that's a little bit of a warning light there in terms of our current ratio, liquidity ratio. If you remember, checking that we can meet our financial obligations as they fall due. Just a reminder: the current assets are cash and things that are going to become cash soon, and the current liabilities are things we have to pay soon. So comparing those two numbers says, do we have enough cash or coming in as cash soon to pay the people who we have to pay soon? Bottom half of the balance sheet, you'll see that there's no non-current liabilities, no long-term liabilities, there's no debt. No bank is going to go anywhere near these guys. This is an equity pure play. This is high risk. This is roulette table. Forget about, choosing red and black. This is kind of, are you going to put your money on 23 or 17 kind of stuff. So we look at how the company is funded. That's these numbers here. And what we see is that the first two, which is the share capital and the share premium. So this is basically telling us that they've had, about 62 million pounds worth of equity investment by the shareholders. The shareholders have put in 62 million pounds. And then the next number down tells me that they've managed to burn through that 62 million pounds. They've actually lost it without actually generating any profit yet. So we can see that equity is coming through pretty strongly. So there's a little statement on the movement in shareholders' equity. You don't often see something looking like this, and this is just saying that they are doing a lot of issuing shares. They're issuing shares in order to keep funding the business, to keep it alive, because they reckon there's a pot of gold at the end of their rainbow. And the question is whether you buy into that story. Looking at the cash flow, not a huge amount going on in the cash flow. You'll notice that the cash flow from the investing activities, that's effectively the intangible assets. So this here is really, I'll put it in blue so we can distinguish between it. This is really the number we're looking at. They burnt through £720,000 during the year. Okay, a little down on £2 million the previous year. So they're reducing their operations. They're really trying to conserve cash to stay alive in order to be able to deliver on this pot of gold, because there's no point having that pot of gold and running out of fuel when you're within 500 yards of the finish line, so to speak. So 100,000 in the bank. They're burning 700,000. They're losing 1.7 million, and they reckon that they've got this great opportunity coming forward. This is all a little bit nerve-wracking. So my instinctive reaction is to go and have a look at the auditor's report and to see what the auditors say. And here we see the going concern, and the auditors basically. These are prepared on a going concern basis that says it's continuing to trade. So the auditors, you'll notice here, their final comment says, overall, we were satisfied that the company remains able to meet its obligations as they fall due for at least 12 months. So the auditors have said these guys will probably be in business for the next 12 months. Not definitely, because there's only two things in life guaranteed. Moeed, you know that as well as I do, and they are, of course,
death and taxes.
Death and taxes, absolutely right. So, so nothing in life is guaranteed, but the auditors are happy that this company is a going concern, which to me kind of looks a little bit funny. So I thought I'd look at why that is. And if we look at page 31, we can find a little bit more information about that from the actual company, from the report by the directors. So here is the note. This is by the directors, not the auditors. And you'll notice this third column here talks about one of the shareholders has actually said, look, I'll support you to the tune of 700,000. Okay, so there's a kind of like a guarantee, and I don't know how cast iron it is, but there's a guarantee sitting behind this company. So if you're a supplier, you can take a little bit of comfort that there may be this money coming through. So you know, they've raised lots of money, they've burnt through that money, they're running out of money. They've got a shareholder who said, look, you know, I'm prepared to put my money in the pocket if necessary. I just want to bring up a couple of other items, so we'll just nip down to page 56. And on page 56, we see the staff, and you'll notice that if we look at the staff costs and staff fees, there's a total. The total number of staff was 4. They're paid 300,000, and they are all directors. So there are there's no admin staff, there's no HR or finance or marketing or sales. These are all directors. Okay, so there's no other staff in there. No doubt they'll look to grow that and to bring in some more staff. And also I noticed this, and we've come across this before. I think it was with MGC Pharmacy, was the directors, and we notice in note 5, here we go. So this note here, the directors waived their salary payments from April 2019 to extend the company's cash through the first application. You know, and directors as a rule don't really take pay cuts. They'd much rather sack staff and slash costs elsewhere rather than see their kind of golden bonuses are going to pot. So the fact that the directors are taking pay cut means that this is, you know, this is pretty serious for the business. However, we see the comment down here, which is from the chairman, Mr. Cameron Davies, and he is talking about, you know, we are really kind of, you know, that there's a real opportunity for this business. So, you know, they've identified a pot of gold. I don't know the business that well. It may be that there is a pot of gold. It may be that they're kind of they're dreaming, that it's just a kind of, you know, they're just talking a good game. We don't know. So that's effectively, you know, what we found out about the company. Just to reiterate what you said about what the company does, there's a little bit of detail on page 9 about it. It talks about our product. I think you articulated it pretty well. I certainly sort of struggled to get my head around here, but it talks about how, as you said, we basically take waste plastic that you can't do anything with it and turn it into hydrogen. And we think about, you know, hydrogen fuel cells, and the kind of, you know, people are starting to talk about maybe we're going to put hydrogen onto airplanes, et cetera, et cetera. So, you know, maybe these guys, this is a bit like investing in Tesla with their kind of battery technology. Maybe this is a really, really good play on the future. Now, Moeed, you mentioned that you said that we found something really interesting in the finances. Have I found it for you, or are you gonna show me up?
No, not at all. Actually, you found it, because I think that's the first company that we've analyzed where they didn't have any revenue on the P&L statement. So that was interesting to hear. And this was a great example of the importance of reading the notes, because if you're going to be doing business with a company, or if you're thinking about investing in them, those notes will give you a bit more context and story behind the numbers there. So that was a very, very interesting business to look at, and it's a public company, as you said.
So it is a public company. So let me just finish on the share price. Here is the share price. So on the left-hand side, you see the share price, which is the max, and you'll notice that I tell you what, there's a few people who are sitting on some very, very big losses. If they bought at 100,000, you can see that, you know, it basically went all the way down and then it's gone to pretty much zero. So I wanted to zoom in on a year. It's fluctuating around a lot. There was obviously a spike in the share price. It's doubled around about the, you know, early this year. Maybe that's when they started to announce that they've got this product. It's kind of dropping down. This is, you know, it's a high risk play. You know, can they close the deal? Can they secure it before they run out of cash? And I'm reminded of a wonderful comment from one of my favorite movies, which is With Nell and I, which is Danny talking about the end of a decade, and he likens it to a guy holding on to a balloon. And he says, you're faced with a dilemma. Do I keep holding on and the balloon getting higher, or do I let go? And you can kind of realize that the longer you leave your decision, the more it's going to hurt when you let go. And you kind of get a feel that there's a lot of guys with a lot of money invested in here, and they need to make it work. But at some point, they're just going to go, you know what, I'm walking away. So good luck to the company. You know, it's a great idea. I really hope it comes good. I really hope that, you know, this is an opportunity. But, you know, for me, I'm just, you know, I'm not investing right now. Okay. And I may regret that. You may be picking up a bargain. You'll notice that the market cap is 200,000. The balance sheet of this company is negative. So basically it's all, you know, it's negative £12,000. So, you know, it's all goodwill. It's all speculation. Is it worth 200 million? Who knows?
Yeah, 200 million. So that's a, yeah, I agree with you. The finances look like, oh, it's so close to the mark of whether it could be a success or it just goes bust, and that's it. So, you know, what are your thoughts? Like, if there's someone here that is an expert in clean technology and understands this a lot more than we do, we'd love to hear from you. But Ted, that was a really, really interesting one. I'm glad we're starting to look at some of the clean technology companies out there. And there are going to be some more. So this is very similar to another company that we have analyzed called AFC Energy. So they do alkaline fuel cells. So there's an element of connection between what these guys do and what they do. But stick around for the next few videos that we have on this particular industry. And Ted, thank you very much. We'll look forward to seeing you all in the next video.
Excellent. And I would reiterate that if you're watching this video and you haven't watched the one on AFC Energy, do watch it, because it's going to be a great compare and contrast case study.
Absolutely, and we'll put the link to that video in the notes and also in the actual video end screen. So great speaking to everyone. Great speaking on this company. Thank you, Ted.